So we have heard about the Proptech market and we heard about strategic partnerships. So we are going to move into the ecosystem, and that's the VC, the founder, and the end user. And why has the East Africa Proptech market been slow to boom? I'm particularly excited about this next panel. So allow me to introduce Christabel Ojok, who's going to moderate the panel. She's the co-founder and COO of Rensco. Then we have Shiro Wanyoike, who's the Group Commercial Director of Mivida. We have Eric Wainaina, who's the COO of Kyoto. And we have Naomi Shira, who's the Global Entrepreneurship and Innovation Coordinator, Habitat for Humanity International Sheltertech. And then we have Ronald Nyairo, Managing Director, Residency Africa. Welcome to the panelists, and we look forward to hearing from you over the next 40 minutes.
We're good to go. Mike. Good afternoon, ladies and gentlemen. My name is Christabel Ojok. I am one of the co-founders of Rensco. And at Rensco, what we're doing is our big vision is to enable 1 million African renters to become homeowners through affordable housing and financial solutions. It gives me great pleasure to moderate this session, where we'll be looking at the challenges facing the PropTech scene within the East Africa market. And in the interest of time, I'll just allow my panelists to introduce themselves, starting from my farthest left. So Ronald, we'll start with you.
Good afternoon, everyone. It's a pleasure to be here. My name is Ronald Nyairo. I'm a property developer as well as an angel investor. I'm currently managing director of Residency Africa, where we build apartments and townhouse developments in Nairobi. We've sold out 3 projects in the last 4 years. I'm also a director and founder of Workstyle Africa, which operates in the flexible office space and continues to grow in Nairobi. And once again, very honored to be part of this panel.
Good afternoon. My name is Naomi Shira. I'm a global entrepreneurship and innovation coordinator with the Tawiliga Center for Innovation at Habitat for Humanity International. So what we do is that we work to increase accessibility of innovative, affordable housing solutions, products, and financial solutions again to low-income housing.
Hi everyone, good afternoon. My name is Eric Wainaina, COO at Kyoto. So Kyoto is building their operating system for property businesses in emerging markets. So we pretty much understand that majority of properties or property businesses in Africa and beyond operate in highly fragmented spaces and are manual in their operations. And so we build the automation around that and further take it a notch by making sure that we plug in the payment side of things to make sure that these businesses operate efficiently. Happy to be here.
Hi, good afternoon, everyone. My name is Shiro Wanyoike, and I'm the commercial director at Mivida and also sister company Oris Property Management. So Mivida is a residential developer. We are a platform as a joint venture between Actis Private Equity and Shapoorji Pallonji Real Estate out of India, third largest conglomerate out of India. And we play primarily in the mid-income space, recently in the affordable space. As a developer, we also offer a turnkey solution by offering property management services across our portfolio projects, but also to our investors and our partners. And that's how Oris Property Management was formed.
Okay, so looking at top-level statistics that Tilda shared with us, we've seen in 2022, out of the total $3.3 billion that startups within the Africa scene managed to raise only $16.7 million. Out of these went to Proptech. And if we narrow it down further, about 90% of that was spread out evenly across Egypt and Nigeria. So to start us off on a high note and on a more positive note, I'll start with you, Eric. So as Eapf, you've managed to raise pre-seed funding. Please take us through that journey and the factors that you think contributed to securing funding. How was that like for you?
Yeah, thank you. So it's often said that the best source of fundraising for any company, any startup, is a paying customer. And I think for us, the journey was long and tumultuous. So my partner Paul and I did nearly 600 emails, I'd imagine, before we were able to get over the line. And beyond that, it was more countless meetings and everything, countless meetings and countless virtual calls. But I think the one key thing that was really, really helpful for us is we had significant traction. So we had paying customers, we had properties that were actively using our systems, and we had also developed a system that took time to be understood by, we took the time to understand the market and build a solution that that was acceptable to them. So for instance, initially when we began off, we thought building an automation solution made sense, but then we soon realized that a large part of the inefficiency that exists in the industry is around the payments. So we decided to build towards that, so hyper-verticalized in that sense. So I think for over and above the traction that we had, I would also say we were lucky that Paul and I had significant experience in the industry. So we both worked in startups, we both worked in real estate industry, so we were not beginning these conversations blindly. So we were again going back to our network and trying to have these conversations with them to try and unlock funding for ourselves. So over and above that, so when I tell you those two factors, I think that's what helped us get over the line. But still, we not raised the entire amount that we want to close. We're nearly there, but so far so good, I would say, yeah.
Okay, great. So what I'm hearing is there was a lot of groundwork done, and you had a couple of paying customers. And then also sort of industry insights and knowledge within the space that you're currently operating in.
Exactly, and I feel, just to sort of like top it up, what also really helped is the climate, what the climate looked like. So when you think about, when you look at the circle of GDP, for instance, for Africa, you'll see a variety of industries, healthcare, agriculture, etc., and real estate is one of the fastest emerging ones. And so the solutions that are coming out of Kenya are hyper SaaS or hyper verticalized in that sense. And so for us, operating in one of the critical areas was an easier sell to our investors as well. Yeah.
Okay, great. So over to you, Ronald. We do have a couple of Proptech startups which are non-SaaS related. And by that, when I talk about non-SaaS, is service, software as a service. So what happens to Proptechs which are non-SaaS related, whereby we've seen most investors keen on MRR? How would an investor approach valuing such a startup? Would it be best to use a different metric, or how would you go about that?
I think you'll probably find as many approaches as investors you find, right? Everybody's going to bring a slightly different flavor to it, and frankly, every investor will bring, often some preconceived biases to the table, right? So you'll find different approaches. But I think what we're seeing generally in the market and around the world now is, money is a lot harder to come by than maybe 2 years ago. And so there's a super focus from investors on what is the path to profitability of this business. I think there's probably a world 3 years ago where for a lot of startups, the emphasis was grow. We'll figure out the economics later. I think what you're finding in the recent months in the market is a hyper focus on what is the path to profitability. And I think in an environment like that, it's very important for startups to be able to articulate number one, how are they adding users to the platform? So growth is still important, but to be able to highlight that it's profitable growth. So what are the actual unit economics? You may not be profitable on an overall company basis, but from sort of a operating perspective or direct costs to that client, how are you demonstrating profitability? And I think businesses that can do that and have a sound team behind them will always be able to find some form of investment.
And still on that question, when it comes to unit economics, is it possible to narrow it down further? Just so that if we have a couple of Proptech startups within the room, what do they need to be on the lookout for?
So put it this way, if you have, let me just create maybe a scenario. Put it this way, you've created a software that is going to help me manage my building, track rent collection, send automated invoices, that type of thing. So not even across multiple verticals, just be able to invoice my clients, collect rent at the end of the month, and auto-reconcile. How do you articulate, how does your business make money from that? So is it that I'm paying a one-off setup fee? Or if it's not a subscription, are you taking a percentage of every transaction? And can you actually demonstrate that what you're taking off every transaction is enough to meet the cost of serving that particular client? And I think if you can show profitability on, that you can deliver profitability on a client-by-client basis, then the entire business case becomes a lot more sound.
Shiro, Mivida is one of the leading property developers with a number of housing projects in the development pipeline. We'd like to know, are you currently working with or planning to work with any Proptechs across the value chain?
So I guess yes to both questions. So as a developer, particularly a developer that works across all the asset classes, we're in residential, commercial, retail. Proptech and the integration of technology is essential in our business from start to end. So yes, we do work with various tech support offerings. The last panel, I was busy Googling because a lot of the services I was learning for the first time. So hopefully, potentially exploring other areas where we can leverage all the technology that's on offer. But it's hard for any person working in this space to not be thinking from a tech point of view. It's the direction the world is headed, so our industry is no different.
Okay. And in your opinion, do you think there's a gap that exists between Proptechs and end user? So for example, are Proptechs building or deriving solutions out of the blue? Is there a mismatch? And if so, what can be done to bridge that gap?
So Proptech is beneficial to all users across the value chain. So, to developers such as ourselves, we're also in the property management space, but also to our owners and tenants, the users of our assets. So I think a consideration of how each person along the value chain will be using that asset is essential as we develop all this new technology. And you are seeing, certain trends in PropTech. There are certain areas that are a bit more, maybe sexier, for lack of a better word, your AIs, your blockchains. But for us as developers and property managers, we're looking for ways to enhance efficiencies. Essentially, we're looking for ways to make our lives easier. So anything that will do that would be keen. We would be ideally keen on. So we like the ideas of the PM services. We like the ideas of smart metering. Solutions that will essentially make our lives easier. So I think there's not so much a gap, but maybe there is, and it's potentially because of funding. It's likely that the areas that that seem more exciting are probably where funding lies more. So you see more development of that type of PropTech. But I think there should also be a balance to have your basic type of PropTech that essentially just make all our lives easier.
Okay, Naomi, why is shelter tech important? And how does that differentiate from Proptech?
Okay, thank you. So at the Center of Innovation, we've come up with what we call shelter tech, which instinctively it's a morph of two words, shelter and technology. And when we talk of shelter tech, we're talking about the innovations around affordable housing solutions. And affordable housing solutions, targeted towards low-income homes, particularly, what we call right now bottom of the pyramid. So far with we work with startups which are within the shelter tech ecosystem. That is the core of our focus. But still, we do work with different players across the ecosystem. From businesses to incubators to social enterprises, financial institutions, and not-for-profit organizations, and much more. So what we've seen is that these startups are solving across the entire construction value chain, from building materials, to financing solutions, and to what we call the allied services, water, sanitation, and energy. So now coming back to how does it differentiate from Proptech? When we look at the two, Proptech and shelter tech, there's very strong similarities. But over the years, we've seen that Proptech is cutting edge technologies for the real estate sector. And while Proptech tends to focus on commercial buildings and middle to upper class residential homes, shelter tech's focus is on the affordable housing sector, targeting the low-income households.
Sounds more like cousins. So we are typically, we are all operating from within the same space. So Eric, we've had valuable input from all the panelists. Now, what I wanted to find out from you is back to the main topic of discussion. In your opinion, so why do you think Proptech in East Africa is experiencing slow growth as a Proptech within East Africa?
That's an interesting question because I wouldn't say it is experiencing slow growth, but I would say it's just that we don't have enough density of Proptechs as say we do have of fintechs or of say SaaS companies that are solving problems in such as ERPs or HR tech, for instance. So I would say over and above, for instance, in our category, I think we haven't seen any competition per se from within East Africa or from within Kenya, but we're seeing that largely from some of the mature markets that were said in a previous panel, Nigeria, Egypt, South Africa, which are more mature markets in terms of, like, say, real estate than you do have here. But then I would also say it's around the industry size. So a market such as South Africa is largely, it's a very huge real estate market, equally with Nigeria, Egypt as well, more mature, but then ours is still, it's not in the formative stage, but it's still rapidly growing. And so I would say perhaps there isn't big bang, sort of like investment going, the $100 million sort of like investments going towards property tech here, as you're seeing it in fintech, but it's also just because of the size of the industry and the number of players existing locally. Yeah.
Okay. Ronald, we've seen traditional investors in real estate investing in brick and mortar. So the question then is, how do we get those same investors to invest in Proptech, which essentially would, make property operational more efficient rather?
It's a really good question.
Yeah.
I think almost the first thing to do would be to get them as customers of the Proptech, get them using it in their brick and mortar investments. And I think, naturally, as humans, once you see something working and you can very clearly understand the benefits it's derived for you, then it's very easy to see how that can sort of scale across the market. So I'd say, for me, the first thing is, get the brick and mortar guys as your customers, and then it's very easy to have the investment conversation if you're doing well. But there's a caution there, which is there are very few brick and mortar real estate investors who are familiar with tech investing. And so one should expect some sort of learning curve, or to walk with them as they kind of go up that learning curve. Yeah.
Is there a particular network or sort of like an association, or something similar to that they can join, or just get acquainted with investing in tech, so to speak?
Yeah, I mean, there's very many different angel investment clubs in Nairobi. A lot of them, though, tend to be sort of informal networks. But I think the best way even to sort of get your startup a lot of visibility within the network is to convince one or two people who are sort of angel investors who have invested before. Because, for most angel investors, you are going to, something will move to the top of the pile of what you're looking at if you've heard 2 or 3 people recommending it, right? Again, it's human nature. So if 2 or 3 people who you've done deals with before call you and say, hey, you need to look at this, you're more likely to look at it sooner.
Finally, I don't mean to put you on the spot, but are you using any Proptech solution in your developments?
Yes, we are. Some local, some international. We've sometimes not had, but yeah, so yes, we are. Some local, some international. But I think there's a scope to do a lot more. So, we've only done, for instance, smart metering in one development. There's scope for us to do a lot more of that. And I think one of the challenges in the sector is really, I've come across a lot of Proptechs, but to Shiro's point, solving some of those very basic issues, time-saving issues, trust issues, having solutions that focus and are very robust on things like that would get a lot more traction. And then it's a lot easier to come and have conversations around Internet of Things when you've already solved, billing or automated metering for me. Okay,
over to you, Naomi. How does ShelterTech support startups and scale-ups within the affordable housing space or the ShelterTech space?
Okay, so at the Center for Innovation, which again, is home for the ShelterTech, we support the scale-ups through 7 initiatives. And these 7 initiatives are to grow these scale-ups to their next levels, particularly with facilitating connections, knowledge, capital, and the visibility that is needed to go to their next levels. So the 7 initiatives include accelerators, and then we also have catalytic funds. And the catalytic funds and the accelerators go hand in hand. So when the scale-ups or the startups qualify for the accelerator, most of them do automatically get the fund benefit of the catalytic funds as part of the program benefits. And then we have a community ecosystem that brings the entire ecosystem together. And then we have other initiatives such as events. We have a knowledge hub. And then we have curriculum tracks, which we share with other ecosystem partners like construction accelerators and the likes. So just recently, we concluded a 6-month accelerator, and there was 10 startups which participated in this accelerator. And all of them currently are already having an impact across the housing sector, again, with solutions in building materials, finance, and water and sanitation and energy solutions. Just to give you a glimpse of some of these startups for the Sub-Saharan Accelerator, which we just concluded recently, is like Cubic, which is based out of Ethiopia, and they are turning waste material into low carbon building material. And then we have Start From Somewhere, which is based in Kibera. So what Start From Somewhere has done is that it has designed interlocking hollow bricks. And literally, these bricks are almost like, you could call them almost malleable because they fit in really tight spaces and corners. You can build carved buildings from them. And also the added advantage to it, if there's any land issues, it's almost as if, you can break apart the interlocking bricks and carry them with you. So we found that this technology is particularly really suitable for informal settlements. Then another final example I'll share with you is Magic Water, who are actually generating water from the atmosphere in areas like northern Kenya where the humidity is really low. Yeah.
Okay, sounds like very interesting initiatives are coming up within the shelter tech space. So on to you, Shiro. As an end user of Proptech, the notion has always been that technology will take over people's jobs, so to speak. And I think that also came up during one of the previous panel discussions. So what would you tell somebody who's in the audience who is a potential end user of Proptech? How can we merge the two and make them understand that it's more of efficiency as opposed to, job loss, so to speak?
That's a good question. I think it's a resistance that we face when we are dealt with something that's new. But like anything, technology is not infallible. So, an over-reliance on it would also prove costly. There still has to be some kind of human review system in place to ensure that the technology that we are empowering ourselves with is actually working correctly. I think it's synonymous with a lot of us who use a lot of these directional services, your Google Maps, but we still wouldn't follow it down in the wrong direction on a one-way street, regardless of how good your technology is. So maybe these are famous last words, but I don't think it's going to replace us as part of the workforce. I think also, our technology bot emails and without any human interaction. So particularly in our case, as developers and property management providers, we still need a human intervention, regardless of the technology we're employing. So I think that personal and emotional point of view probably holds a strong case that technology is here to stay, yes. It is here to make our lives easier, but it won't replace us. Yeah.
Well, it's great to see that we have a couple of forward thinking, and I think that's the way we should go. So now over to you, Eric. We've had a meaningful discussion across the panel. I'm curious to find out, how does the subsequent fundraising rounds look like for Eapf, and how are you positioning yourself for that? And even as you answer that, one of the questions that Michael from the audience asked is, how can end users support Proptechs? So I think you can combine that in your answer. Yeah.
I'll start with the second one, and I think the one way that end users, and largely that will be developers, property managers, can support Proptechs is by being customers, of course. And to sort of tally with what Ronald said, that the climate right now, globally, in terms of fundraising, is getting a bit chaotic. Of course, the US is raising interest rates, and so fund managers will, of course, inadvertently move towards safer asset classes, and startups is a high-risk game, irrespective of whatever that looks like. And then it's even harder when you're trying to build in Africa, because again, people fund people they know, or they tend to fund people that satisfy whatever biases they have, and that's just the way the situation is. And so for us, thinking about subsequent rounds, I think it's in largely two ways. A, grow, and grow both organically by acquiring more customers. So for instance, we were to dedicate a chunk of our 500K raise is towards hiring, strengthening our product, and of course, moving towards expansion, but largely to markets that are highly favorable towards Proptech. So markets such as Ghana, that initially mentioned, South Africa, and potentially Egypt would be on the cards, but of course that's an expensive gamble. So for us, it's both being proactive and as well as being conservative in terms of the way we use our funds. In terms of what we like to do in terms of a subsequent round, I think I don't want to skew our valuation just yet, but I think perhaps we'll shoot for $1 million, $1.5 million or thereabouts. And our largest goal in that regard is to essentially become a whale, if I'm going to use this word. So keep building this to be as fluid as, say, Microsoft Office. So if you are thinking about being a property developer or if you're a property manager, then KyotaPay serves as the only touch point that you might need to understand everything about your operations and everything about your payments. And for us, I think that's the larger goal when I think about it. Finally, in a 5-year quantum, okay, well, I don't think in 5 years, I'm sure in 5 years I've already done well, but and largely running a profitable ship. But I think what we'd love to do is we are, as a continent, urbanizing in the fastest pace ever seen, I guess, since China. And so that means there's a lot of data and insight that we need, and property developers who are in the room will need to understand, where do I build? How do I build? What kind of housing is needed in whatever location? And so we'd love to be that source of truth in that regard. And I feel tallying whatever we're doing with the financial services speed, automation, data, I feel like those are enough revenue streams to run a very, very successful company that could potentially IPO, I don't know, we'll see, or potentially an acquisition play, or potentially become the whale again. Yeah, so that's the way we are thinking about it from our end.
I'm glad you've touched on the acquisition part. Not that I want you guys acquired, but any potential mergers. I saw MRI was somewhere in the room. You know, if South Africa are keen on entering the market, is that something that you'd be open to? And I'm actually pitching for you.
Yeah, I feel like it's too early to tell as well, but there's two ways to play the acquisition game. You're either looking for an exit or you're looking to acquire someone because they come with significant market advantage. So for instance, if it doesn't make sense for Paul, I, and the team to spend 6 months in South Africa building out that market, whereas would be perhaps having another market in significantly better way, then it could make sense to do that. But for now, I think we are heads down, building the product, heads down, close around, keep building and keep acquiring customers. Yeah.
That's fine. Thank you to all my panelists. I think in the interest of time, I'd like to close it at that. Do we have more time for Q&A? Okay. We can take one question from the audience, if there's any. Okay, I think looks like we're all good. Yeah, super. Thank you.
Thank you.
Okay, perfect. Thank you so much to the panelists. I think that was extremely insightful.